So there's 6 levers that are really going to determine where you get to on your wealth journey. It's the income that you generate, the expenses that you spend, the time frame that you've got, it's the risk and the return that you take on that journey, how you structure the investments, and then also a potential liquidity event. So income. Every household has some degree of income. The income might be something that is a career path chosen as to where you get to on that income scale. It might be a household where a husband or wife stays home and you've only got one income versus a household with 2 incomes. So expenses, you've got a number of fixed expenses, so be it your rent or your mortgage, your electricity bills or your food and grocery bills, or the discretionary expenses, which is more the travel, the shopping, those type of things that you have a little bit of flexibility over. So risk return is the other lever. A lot of that applies to, in most households, you'd hope that there's some sort of surplus of what's coming in from the income and what's going out on the expenses. The risk return is really about what you do with that surplus. So the simple thing you could do is just park it in a bank account, earn very little, take on very little risk, or you could make another decision, which could be repaying debt, or it could be investing, being it buying some shares, property, or other financial assets. So time frame's the other lever. That's just as important that it is about how long you work for, but also for how long you're going to be using the funds in retirement. So next is structuring, and what I mean by that is it's about how you hold your wealth. So it's investing in your own personal name versus investing in your superannuation versus any other entity like a company or family trust. The final lever is the liquidity event. Now this one doesn't apply to everyone, but it can make a substantial difference. What I mean by a liquidity event is the sale of some sort of asset that's going to generate some cash. That could be as simple as something like a property sale, or it could be a business sale, or it might be something like an inheritance, or for those very lucky few, it might be a lottery winnings or something like that. So remember, it's all about balance. Each of these levers is going to impact the other. You don't want to be too far on one side where you're all about the income and the investments and forget about the lifestyle, and at the same time, you don't want to be spending everything today and not putting enough aside for retirement. So at BDO, we've really fine-tuned these levers. We work hard to understand our clients and which of these apply to each of them, and we've built the models that can project out based on the personal situation, what your situation is going to look like. That's where we love working with clients and being able to help them understand not just where they're going to get to, but to get a balance between that journey to get there.